Welcome to Academic Gain Tutorials. In this video, we will look into the differences between finance and economics. Finance, as a discipline, is derived from economics. It involves assessing money, banking, credit, investments, and other aspects of the financial systems. Finance can be further broken down into three related but separate categories: public finance, corporate finance, and personal finance. On the other hand, economics looks at how goods and services are made, distributed, and used, as well as how the economy overall functions, along with the people who drive economic activity. The two main branches of economics are macroeconomics, which looks at the overall economy, and microeconomics, which looks at specific factors within the economy. So, let's look into the basic differences between finance and economics in a tabular form. Difference number 1. Finance operates at both the micro and macro levels involving individuals and firms, whereas economics primarily operates at the macro level concerning countries and industries. Number 2. Finance focuses on managing money, investments, and assets, whereas economics deals with the production, distribution, and consumption of goods and services. Number 3. In finance, decision-making power exists at individual, corporate, or institutional levels, whereas in economics, decisions are mainly made by governments and public authorities. Number 4. Finance aims to maximize returns and manage risk, whereas economics seeks to allocate scarce resources efficiently and maintain economic balance. Number 5. Finance is more practical and applied in nature, whereas economics is more theoretical and model-based. Number 6. Finance studies tools like the time value of money, cost of capital, and risk evaluation, whereas economics studies concepts like inflation, GDP, and consumer behavior. Number 7. Finance exists at the root level of society, even within households, whereas economics operates on a broader level, influencing national and global structures. Number 8. Financial decisions can be altered quickly to adapt to changes, whereas economic decisions require extensive analysis and are slower to implement. Number 9. Finance is considered a subset of economics, whereas economics acts as a superset encompassing finance within its scope. Number 10. Finance is applied in corporate, personal, and public financial management, whereas economics is applied in policymaking, forecasting, and understanding markets. Number 11. Finance is primarily profit and growth-oriented, whereas economics focuses on overall welfare and resource optimization. And difference number 12. Finance depends on economic stability to shape its investment decisions, whereas economics provides the foundation and theories upon which financial systems function. So, these are the differences between finance and economics. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.